Tether has crossed $100 billion in circulation, bigger than most banks. In its latest report, over 85% of its reserves are in US Treasuries. It now moves more money each day than Visa. This is the Tether Theory, and it shows why USDT might be crypto's most powerful and most dangerous shadow bank. Welcome to Plugged In Crypto, where we break down ideas, charts, and news. Tether, or USDT, is a stablecoin that promises $1 for every token. But unlike banks, it operates offshore, outside the traditional financial system. This makes it both resilient and risky. Tether solved a massive problem for crypto traders. They needed a dollar that could move instantly, 24 hours a day. Banks close on weekends and wires take days. Tether gave crypto markets a frictionless dollar, redeemable anywhere, anytime. Exchanges quickly adopted it, and now most global crypto trading pairs are against Tether. On platforms like Binance and Huobi, USDT is the base currency. Without it, order books would collapse. The scale is staggering. Tether processes more daily value than Visa and dwarfs PayPal. In emerging markets, people often use Tether before Bitcoin. In countries like Turkey and Argentina, USDT is a lifeline against local inflation. Instead of holding collapsing currencies, people hold digital dollars on their phones. By 2025, USDT controls over 70% of the global stablecoin market. Tether isn't just surviving, it's dominating. But it's not a normal stablecoin. It doesn't have the clean regulatory footprint of USDC. It doesn't report to US banking regulators, and its reserves are controversial. Critics argue that without a full audit, we don't know what backs all those billions of tokens. This is where the idea of Tether as a shadow bank comes in. In traditional finance, shadow banks perform banking functions without the same regulations. Tether fits that mold, issuing dollar-like liabilities at scale without oversight. Its offshore design gives it incredible flexibility. It can serve customers in places US banks can't and move money with little friction. But it also creates systemic risk. If a traditional bank wobbles, the central bank steps in as a safety net. If Tether wobbles, there's no safety net. Yet Tether has survived countless waves of doubt. In 2017, critics predicted collapse when it first passed $1 billion in circulation. In 2019, the New York Attorney General investigated Tether, and many thought it was over. In 2022, during the Terra and FTX collapses, panic hit stablecoins. USDT briefly lost its peg but quickly recovered, emerging stronger each time. What explains this resilience? Part of it is sheer demand. Traders and exchanges don't have many alternatives. Circle's USDC is regulated but tied to the US banking system and has faced its own issues. CBDCs are still experimental, and bank dollars are slow and expensive. That leaves Tether as the dollar of last resort, the offshore dollar that actually works. This creates three scenarios for the future. First, Tether continues to grow and becomes the de facto offshore dollar for the global crypto economy. Second, regulators crack down hard, demanding audits or restrictions on US customers. If Tether lost trust, billions in liquidity could vanish overnight, triggering chaos across exchanges. Third, we end up in a multipolar world, with Tether dominant in offshore markets but facing competition. Whichever path we take, the stakes are enormous. Stablecoins are becoming the plumbing for the global financial system, and Tether sits at the center. Supporters argue it's battle-tested and indispensable for emerging markets. Critics say it's opaque and risky, one shock away from disaster. The truth may be both. Tether is the dollar lifeline and a systemic vulnerability. The Tether Theory isn't just about one stablecoin. It's about how a $100 billion offshore shadow bank became the lifeblood of global crypto. And what happens if that lifeline snaps? Please subscribe to Plugged In Crypto and stay plugged in.